Hello students, I am going to discuss the term trade payables in accounting. Trade payable, this is an accounting term and which is very important and you need to understand this. So there are two terms, one is trade and second is payable. Trade means, students, purchase and sale of goods with the purpose of earning profit. That is trade. It means somewhere goods are involved when we are talking about trade receivables and trade payables. What is payable? Payable simply means amount to be paid to the outsiders. Amount to be paid to the outsiders on what? On which account? On account of credit purchases. It means whenever we buy goods from the supplier of goods on credit, the person's becomes our creditor. The person becomes our bills payable. It means credit purchases of goods from the supplier give rise to trade payables. Trade payables, for better understanding purpose, can be classified into two categories, students. The first one is creditor and second is bills payable. Creditor is the person from whom goods are purchased on credit, but nothing is given in writing regarding when the payment is to be made after 15 days, 1 month or 2 months. In this case, actually, the transactions take place on trust basis between the two businessmen or between the supplier and the businessman. Reason being, we keep on purchasing the goods on credit and from time to time we keep on making the payments, and on this trust basis the transaction keep on taking place. And this is the case of creditors. Students, see this example: purchased goods from Bhuman for rupees 21,000. This is the example of creditors, and the simple journal entry will be purchases account debit, purchases account debit 21,000 to Bhuman. And in this case, students, Bhuman is our creditor. See, Bhuman is our creditor, but we have not given anything in writing regarding the date of payment, that when the payment is to be made. Payment can be made within 10 days, within a week, within 15 days, within 1 month or 2 months or 3 months. That is, based on understanding between the supplier and us. But what is this bills payable? Bills payable, it means amount is to be paid and that is mentioned on a bill, that is bills payable. So simply you try to understand, bills payable is a written document, student. Bills payable is a written document which is prepared by the supplier of goods from whom we bought the goods. He prepared that bill and that is duly signed by us, on which the nature of goods, amount of goods is mentioned, and at the same time, most importantly, it is also mentioned when to make payment of these goods. When everything takes place in writing regarding the amount of goods, regarding the date of payment, that becomes a bills payable and it is a legal document. What will be the journal entry for it? First entry is same, students, same. Suppose same example we are going to take here. First entry will be purchases account debit to Bhuman. Whenever a credit transaction take place, that will take place in this way, same manner. As far as accounting is concerned, recording is concerned, purchases account debit to Bhuman 21,000. We bought goods from Bhuman for 21,000, the first journal entry. Then Bhuman drew a bill upon us. It means Bhuman has written a bill on a prescribed pro forma and we duly signed that bill. That becomes bills payable. That journal entry for that will be Bhuman debit 21,000 rupees to bills payable account. Bills payable account 21,000 rupees. See, students, remember one thing, both are current liabilities, whether it is a creditor or a bills payable. What is the basic difference? Creditors take place on trust basis understanding basis, and nothing is in writing regarding the date of payment. And here the position of seller of goods is not very safe. In case the buyer of goods refuses to make the payment, then taking legal action becomes difficult. But in case of bills payable, the buyer of goods is not in a position to refuse. If the buyer of goods refuses to make the payment, basis this bills payable, which is a written document, legal document, the seller of a goods has a right to take legal action through the court of law. So I believe you have understood the difference between creditors and bills payable. This is unsecured position of the seller, and this is the secured position of the seller. But both are current liabilities which appear on the liability side of the balance sheet. So students, I think I made it clear to you what is creditor, what is bills payable, and finally what is trade payable. These take place when goods are sold, goods are purchased on credit basis. Stay connected, improve your knowledge, share the video with your friends and relatives, and subscribe the channel if not yet subscribed. And most importantly, if you want to understand the same video in Hindi, visit my another channel, second channel, that is Commerce with Difference.